Yeah, we have so many different product offerings now that it can be done, virtually immediately, depending on how the merchant might want to accept. But Flex is really built to help merchants thrive in this next era of commerce. And what that means for us, and you touched on a few things talking to Matt there about legislation that's coming. I mean, when Genius, just a hint, the rumor of Genius started, we saw merchants get really interested. When that passes, then you start to see a lot more roll in. The same things happen with clarity right now. Merchants are interested because there's a promise of clarity. The next thing is going to be tax reform. And we've talked about this publicly a few times, but we need de minimis relief tax reform. So when folks go and they buy a cup of coffee, it's not a taxable event. So really there's this three-pronged thing. It was Genius for stablecoins, clarity for market structure, and then tax reform. When merchants have all three of those things, and there's actual law controlling three of those things, I think they're going to start to really roll in, and this whole thing just sort of explodes.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video, this is actually going to be part 2 of the previous video breakdown, where in this video, I'm going to read a full entire fundamental update from Sygnum Bank from just the other day, November 22nd, 2025, that just goes to show you guys how important the fundamental drivers are in this space, those in which we talk about in detail in the private CYPRX community, keeping our community members inside the loop of what's happening in the digital asset ecosystem and the fundamental backdrop so that they know whether the sentiment is risk on or risk off. As you guys have seen in previous video breakdowns, ones prior to this one, we covered and touched on in detail the NVIDIA earnings report, the Japanese yen trilemma with the possible unwinding of the yen carry trade, and how all of that has negatively affected sentiment and what could possibly unfold moving forward. This was also a very great update that talks about the current market cycle, what we're experiencing, why we're seeing valuations so low. But then at the very bottom of this, it goes on to confirm that they are 110% interested in onboarding back into this digital asset ecosystem and confirm that the long-term outlook is still net bullish. Now, before we read into this, I want to show you guys that not only is there a large bank and financial institution that will confirm this for you guys today, but taking you guys over here to a recent interview from Chris Sullivan, the Hyperion Decimus co-founder, who is a large crypto hedge fund in the digital asset ecosystem. Listen to what he goes on to say from an interview that was uploaded from CoinDesk just about a day ago, where he goes on to mention that they sold over 42 days ago, which was roughly around when the digital asset ecosystem topped at around $4.24 trillion. And now they're ready to re-implement capital back into the crypto ecosystem. Take a second and listen.
And that's where these vicious V's that we've talked about throughout all of finance, that's how those materialize. Essentially, when you're just straight down and then all the selling's done and it kind of retraces it. And from a trend perspective, and especially on how we're running funds, like we were able to get out of the way entirely in one fund about 42 days ago and have now prepared everything to grab the turn.
They sold out of the market in one of their funds 42 days ago. As of time of recording, it is November 23rd. 42 days ago, again, would put us roughly around the peak that took place in October. And then he mentioned now they're ready to reinvest and catch the V. And he's talking about a possible V-shaped recovery. Now, I'm not going to sit here and say that that is or is not going to happen, but this is confirmation, verbal confirmation, that these large hedge funds, these family offices, these institutions, they're going to be buying the dip, ladies and gentlemen. And that should give you guys confidence, again, not financial advice, to start to do research, to research projects that provide real world value, real world utility, real use cases, and are being adopted by these large institutions. Because when the lights turn back on, when the fundamental backdrop is relatively risk on and favors a risk on mood, I'm going to go out right and say that coupled with regulatory clarity, we are going to see a recovery in the digital asset ecosystem, the likes in which we have never seen before, considering that, again, institutions are going to likely be involved in the next stage in the recovery process. Moving over back to the Sygnum Bank report. Now, for those of you guys who don't know what Sygnum Bank is, they are a large bank financial institution that is heavily involved in the digital asset ecosystem, fully regulated in multiple different jurisdictions, but they primarily stem from Switzerland. So I want to read this November Sygnum Bank report from the 22nd that was published just a couple of days ago, considering depending on when you are watching this particular breakdown. So The ending of this report is what you're going to want to stick around for. So reading thoroughly through this, it says, after a constructive major part of the year, the fourth quarter has posed serious challenges for risk assets in general, and crypto in particular. The sell-off has more than erased the positive interim year-to-date performance of Bitcoin and pushed the broad ecosystem into negative territory. Is this the final chapter of the current cycle? We believe the evidence suggests otherwise. Despite battered sentiment and heightened volatility, both macro and crypto-specific drivers continue to point towards powerful tailwinds, tailwind being something that is supportive for risk sentiment, implying that the recent correction is excessive rather than structural. That opener right there should make you guys want to stick around for the remainder of what this report has to say. The shift in narrative was triggered less by fundamentals and more by a sudden repricing of risks at a time when investors were already debating whether the 4-year cycle had peaked. This goes hand in hand with what Matt said from Bitwise at the beginning of the previous video breakdown.
I'm not shocked. I don't know what Ryan thinks. I'm not shocked. What I think I've realized is that I misweighed two forces, right? So if you think about what's going on in the market right now, Harvard is buying and retail is selling, right? Abu Dhabi is buying and crypto natives are selling. And I think when we entered the year, the assumption was that the massive purchases from institutions and corporations would be more than enough to soak up any additional supply from retail selling. And I think the element to which I'm surprised with is that there's more retail selling than I anticipated. I think the thing that I didn't factor in was people, I think, pre-freaking out about the 4-year cycle and wanting to dodge the 30, 40, 50% pullback in the market that they saw coming in 2026. I didn't think about that psychological effect. I think that's what we're living through. I think we have to finish living through it and then we bottom. But I do think we're sort of short-circuiting the 4-year cycle now, probably closer to the bottom than the start. And I think it's still upward over the long period of time.
How retail is the one selling and how larger investors are the ones right now buying. The context implied the impact of negative headlines. Q4 has delivered plenty of them. To summarize key elements highlighted by traditional financial news platforms and crypto-specific platforms, we had macro shocks, market structure stress, and liquidity pressure. I'm not going to read into detail to save time for you guys. You guys can pause the video and read thoroughly through those if you'd like, but these are all things that we talk about inside the private CYPRX community via our day-to-day fundamental updates. Again, if you guys want access to those fundamental updates where we talk about US-China trade war escalations, government shutdown, limiting macro visibility, and December rate cuts, so on and so forth, we talk about those things on Zoom calls every single day privately in the CYPRX Discord, and you guys have direct access to staying in the loop with those ongoing happenings. The reaction has been disproportionately negative. We observed a significant deleveraging across venues. CME open interest has decreased. Funding rates, for example, on Binance have temporarily turned negative, although mainly recovered in the meantime. The fear and greed indicator, as published by CoinMarketCap, reached lows. RSIs even on crypto blue chips extended into oversold zones as indicated on TradingView, and Glassnode data indicating that short-term ETF buyers have exited positions at losses. These signals reflect sentiment capitulation rather than long-term deterioration in fundamentals. From a cycle perspective, we see a maturing phase rather than an ending one. That is a huge statement right there. Volatility and drawdowns could indeed become more pronounced, but the macro environment remains supportive and may help reduce uncertainty once data publications resume orderly frequencies again. Business cycles indicators point to an acceleration driven by services. While manufacturing remains muted for now, improving business cycle momentum correlates with higher risk appetite, and that is supportive of increased DeFi activity. Inflation risks for now still remain sticky based on the latest CPI numbers, but continue to undershoot tariff-related fears, with long-term expectations firmly anchored as evidenced by the 5-year break-even inflation expectations. For example, the market still prices multiple rate cuts throughout the year 2026 based on the Fed funds futures, creating a constructive backdrop for liquidity-sensitive assets such as crypto and tech. Based on the sentiment survey, crypto-native sentiment has flipped to maximum fear. Historically, such extremes tend to coincide with seller exhaustion and deleveraging, making them contrarian rather than confirming. Talking about the regulatory momentum remaining underappreciated, this is exactly, again, what I was touching on in the part 1 of today's video. The U.S. shutdown has delayed legislative work on Clarity Act, but bipartisan negotiations continue and expectations remain constructive. Despite some uncertainty around the precise timing of final passages together, the store of value and validation of Bitcoin by the US Treasury, Luxembourg, and several US states, and the Genius Act supporting Bitcoin as a means of payment, the passage of the Clarity Act provided a landmark framework for crypto as a next generation decentralized application infrastructure. In such a scenario, smart contract platforms and applications stand to benefit disproportionately. Additional policy developments are also worth mentioning. The SEC and CFTC have adopted a more pro-crypto stance in their joint approach to bringing regulatory clarity to the market. A new bill was introduced before Congress that would allow federal tax obligations to be settled in Bitcoin and routed into a strategic reserve. The Treasury and IRS have authorized institutional staking for crypto ETFs, allowing eligible funds to earn and distribute staking rewards. That is a huge policy update right there. To conclude, Q4 has delivered a painful correction and a sentiment reset. This is where it gets juicy and how they end it. But the medium-term drivers of this cycle, macro momentum, liquidity on chain, fundamentals, and regulation remain intact. The current environment is uncomfortable in the short term, but historically it has offered attractive entry points for investors with a mid to long-term horizon rather than the cycle ending. So again, this is coming directly from the Chief Investment Officer at Sygnum writing this report. At the very bottom, literally tells you guys that this is a blessing in disguise, which coexists with what this gentleman said. After selling the vast majority of their portfolio back in October, they are ready to re-implement capital into the space. Remember, none of this is financial advice. I'm just here to show you guys that these institutions are sitting on stages, sitting in their documents, telling us that once we see regulatory clarity, that will be the final act to enable these institutions to flood into the digital asset ecosystem. And now I've shown you guys physical proof that not only is a bank like Sygnum telling you guys that this discount is a blessing in disguise, but that we also have hedge fund managers sitting on panel discussions telling you all the same thing. As always, bringing you all some of the realest research. Now's the time to focus. Now's the time to stay locked in. Tap in with the community that's always focused on these insights. Remember, our Discord offers one of the most comprehensive, thorough research platforms in the digital asset ecosystem. We cover things from digital banking, metaverse, DeFi, cybersecurity, stablecoins, 24-hour coverage, always updated information, some of the best documents and panel discussions that you will never be able to find in the mainstream spectrum of the retail research. As always, many blessings to you guys. If you guys want to find any of this or access any of this info, you can always head over to CYPRXtraining.com, tap in with us in the private CYPRX Discord. We have weekly Zoom calls, fundamental breakdowns, constant updated research, access to institutional deltas and dark pool information, all inside for the private community members. With that being said, many blessings to you guys. Be cognizant, continue to strive to do research out there, and I'll see you guys in the next video breakdown.